All right. What is up, my peeps? Joshua Smith here at GSD Mode Studios with another GSD Mode podcast. And today I'm here to break down 5 steps to take to ensure that you thrive during this changing real estate market. Look, we are now in a technical recession. We've got growing and continued inflation that's here to stay for some time to come. We got growing energy and growing food costs that are continuing to increase. We got job layoffs and job losses that are just starting to take place that we are just in the beginning of. So we're going to see unemployment continuing to increase. We got continued rising costs of capital, which rising cost of capital always equates to a shrinkage, a tightening in economic and business growth. And overall, we got the largest debt bubble on all levels, consumer, corporate, and government debt of all times, not just nationally, but globally, and not just the largest of all time, but like magnitudes of size of all time. All this equates to a rough economy for some time to get to come. You know, we're entering a long winter here, and these are 5 steps that I broke down that I wanted to share with you guys today to hopefully help you, if you follow these, continue to crush it inside your real estate business. All right, so let's jump on into these. All right, number 1, do not operate from a place of fear. I'm talking to a lot of real estate agents right now, a lot of agents on my own team, and so forth that they're having these concerns that haven't seen anything, maybe they've been in the market since, 2012, 2013, and have only seen one market, right? We just got out of the largest or the longest bull market in recorded history, meaning, crazy appreciation, crazy, of all, asset classes, if you will, that haven't experienced anything but a crazy seller's market and are having some concerns with that. And whether you've been in the market for longer than that or not, there can still be a lot of fear that takes place throughout. So, there's a difference between operating from a place of fear and operating from a place of awareness. And I'm not saying to not have, some worries. I mean, a little bit of worry can be good. I'm worried about some of the changes that I'm seeing, but I'm not allowing myself to operate in a place of fear. And the difference is I might have worries, but then I'm proactive at making sure that I go out there, do my due diligence, have the awareness of whatever I'm worried about, and then I'm proactive with those steps. The issue with fear is when a lot of people will get into a place of fear shuts them down. They get into inaction. They become an ostrich, burying their head in the sand, and don't go out there and do the things that they need to do. They just become paralyzed through fear, and that's the opposite of what you want and what you need right now. Right now, I need to be taking massive action. And right now, I know I'm talking a little bit more about mindset stuff. We're going to get into some tactical strategies that you can do here, but don't operate from a place of fear. Just always understand that there's massive opportunity to be had at any time. I can promise you this: at any time in your market, whether the market's been great, whether it's been bad, whether it's been the worst housing market in recorded history, like during the GFC, the Great Financial Crisis of 2008 to 2012, there are realtors in your market kicking massive ass. Real estate as a product has always traded hands, meaning there's always people buying it, always selling it, and so forth. So there's always opportunity to be had, but you need to be able to see that opportunity, be able to think clearly and be able to see the opportunity. And if you're operating from a place of fear, it's very difficult to do that. And staying on this mindset, a portion of this, one of my philosophies that I've always operated my real estate career now over the last 18 years, and I've seen a lot, I've had now 2 crazy booms that I've seen, like just insane booms, that one that we just got out of, but also the 2005, 2006 crazy boom. I've seen the worst housing market in recorded history, from 2008 to 2012, and a lot of in-betweens in there as well. And my business has always continued to grow and thrive. And it's because I operate by this philosophy, this mental mindset, if you will, this mental philosophy of there is no such thing as a good market or a bad market. The market is always good for somebody. It's my job as a real estate professional to identify whom the market is good for, and then shift my marketing, my prospecting, my energy, my focus into going after whom it's good for. Look, I look at this as I'm a real estate expert, right? So, and I'm not, saying that to like brag or blow my own horn or what, toot my own horn or whatever. I'm just I'm talking about this is like thinking for you to think of yourself as this way as well, right? So okay, hey, my job is to be a real estate expert that moves real estate, whatever your niche is. So like my niche here in Phoenix, Arizona is residential real estate. I mean, we have the cities that we work, the zip codes, neighborhoods that we specialize in, and so forth. But it happens to be single family detached residential real estate, which is our primary focus. Okay, so with that, like my job is to move single family residential real estate in these geographical locations. Now, the buyers and sellers of those may change over time. It might be institutional investors, hedge funds, private equity firms. It might be, flippers. It might be traditional buyers, traditional sellers, who it might be short sales, might be foreclosures, REO, it's going to change, and it has changed over my 18-year career. But the thing that hasn't changed is the actual product that I'm selling, and my job is to move that real estate. So just understand, operate from that mindset of the real estate market is always good for somebody at the highest level. Our job is to identify whom it is good for, and then pivot our marketing, our prospecting, our energy to whom it's good for. That's where the opportunity is at. All right. So number two, this is also, kind of a mindset thing here as well. And then we'll jump into actual strategies. But don't wait for a savior. Don't. So many people get caught up in this. They're looking for, okay, who do we blame? And then who's going to fix this problem? You can't, nobody's going to show up at your door to give you your goals, your dreams, make that a reality. Nobody. This problem is so big. This has been, and I don't have time, in this podcast to go through all the problems that have led us down to where we are today. But it's so massive. I mean, this has been decades and decades and decades in the workings. And it doesn't matter if, who's in the White House, there isn't a savior that can fix this problem. And it's just the wrong question to be asking anyway. That's a victim mindset, right? Where victims sit there and think of okay, well, who's going to save me? Who's going to bail me out? It's somebody else. They're always pointing the finger or, waiting for something instead of just going out there and making shit happen. What you need to be doing is asking yourself, okay, just because we're in a recession doesn't mean you need to be in a recession. Doesn't mean your family needs to be in a recession. We can be in a technical recession, a technical depression, and so forth, but you can be out there kicking ass, thriving, and making more money and doing better than you've ever done in your life and your career. So you need to be asking yourself, what am I going to do? Right? Not, well, what is Biden doing? What is whoever the next president, whatever, no, right? Don't, hopefully they get in there and do a good job and make some impact and so forth. But there's been nobody in the White House that's ever had an impact on my overall business per se. Like my business thrived under Bush, thrived under Obama, thrived under Trump, thrived under Biden, right? And it's because the one common denominator is me. I'm going to make sure that I go out there and thrive. I'm not looking for a savior. I am the savior of my own business, of my own life, if you will, right? So don't wait for a savior. Go out there and always asking yourself, don't get caught up in the, because it's so easy, especially when you watch a lot of the mainstream media, which I highly recommend to not do, because it's all a bunch of shallow bullshit that never has enough context to feed you enough data to help you make sense of the world anyway. So it's all just entertainment junk and keeps you distracted, but it's easy when you go down that path to start pointing the fingers, and then waiting for somebody to come in and save it, and so forth. But that's going to get you nowhere, right? So you're always asking yourself, what am I going to do to make sure I'm successful? What am I going to do to ensure that I kick ass, continue to hit my goals, continue to grow, thrive, continue to provide opportunities for myself, my family, whatever that may be. Success is always internal. It is never external. Remember that. Success is always internal. It's not external. Never, right? So winners don't blame the market. Losers blame the market for their lack of success or whatever, right? They're, oh man, I wish the market was different. Oh, things are tough. Oh, I had to get out of the market because, I had to let my real estate license go because the market was tough. No, you had to let your real estate license go because you chose to not be committed to your craft and put in the work, because again, remember, business is a zero-sum game. Somebody's always winning. Somebody's always losing. I can promise, that somebody's kicking ass in the real estate market, even in your own market during those times where others might be dropping out. And right now, at least in my market, they're dropping out like flies. We just had the renewal date in beginning of July, beginning of this month. And 20,000, we had a drop of 20,000 agents in my market. Now, some of those just may have lapsed and we might, get even if 50% of those end up re-signing back up and just let it lapse or whatever. I'm sure it's not that big of a percentage, but even if it is, it's still a drop of 10% or 10,000 agents that we've lost this year. So as of now, though, 20,000 agents, have dropped out. Now we're the most saturated real estate market per capita on the planet. So there's still like 40 some thousand agents in our market. So there's still a lot, but they're dropping out. They're giving up. They're operating from fear. They don't know what to do because they're seeing some subtle changes, whatever that may be. Don't let that be you. Okay. So number 3, now we're going to get a little bit more, tactical here and dive into some different strategies. All right. So as I said earlier, there is no such thing as a good market or a bad market. It is about identifying whom the market is good for and going after whom it's good for. So here is how you do that, right? So you need to identify where the opportunity is at in your current market. So where we identify where the opportunity is at. So again, who the market, who is it currently good for? Then you need to identify what their problems are, and then identify solutions so you can become the problem solver for your potential clients, your ideal clients, and so forth. So this becomes really important, you guys. Again, real estate's always trading hands. So you got to know this, where it comes into knowing your market. You know, what's selling, what are the locations, what are the price points, what are the zip codes, what's the type of product, what is selling, what is moving, who's buying it, who's selling it, what are the problems that they have. So now you know who you can target, or the opportunity is those that are buying and selling real estate at any given time in your market. Then once you identify that, then you can identify the problems that they have and go out there and help solve their problems. You want to become the problem solver for your clients and potential clients. And then that becomes your marketing message, and so forth. I'll give 2 examples here. So right now, we still have an abundance of people that want to buy here in Phoenix, Arizona, but our market's changing. It's changing fast. We're one of the fastest shifting markets, and we'll probably be one of the hardest hit markets throughout this, time. There's a couple correlations. Those markets that grew the fastest will probably come down also the fastest and the quickest, right? But then also how investor heavy is your market, how investor driven. And our market has led investors. We've been about 34% of all of our sales have been investor driven the last few years. So nation average is like, 24, 25%. And we've been, 10% above that. Following, 100 years of real estate historic trends, and what those correlations are with real estate corrections and crashes. If it follows what it's always followed, and history tends to repeat itself, we're going to be hit very hard. And that's why we're already seeing massive changes right now here in Phoenix, Arizona. And again, your market might be slightly different. Maybe you're not seeing these yet, but you will. Everybody's going to feel this, right? Not every market will be real estate's very hyper local. My market here, I don't know how we don't get away with at least a 40 to 50% hit on home values over time. And that might be 2, 3, 10 years that takes to come to fruition. But I don't see how we can escape that, right? Your market may only decline 5%, 10%, 20%. Each market's going to be slightly different. You got to know your market. Real estate's very hyper local. But with that being said, okay, there's 2 main problems with these buyers right now that want to go out there and buy properties in our market. When I say this, they're their problems, right? The obstacles and objections that we hear from them that are their problems, whether it's a true problem or a perceived problem, right? We've solved both these problems. So right now it's a perceived problem in their head. My job as a real estate professional, remember, is identify where the opportunity is at. So this is an opportunity for them. Like, they want to buy a house, but there's 2 bottlenecks that exist right now that we've seen that we're going out there and solving for them. One is we got these subset of our buyers that are, hey, I want to buy right now. Qualified to buy, I want to buy, but I'm really worried about the market crashing. Now, I'm not going to be one of these agents that is irresponsible and go out there and say, oh, the market's not going to crash. It's not going to be anything like 2008. And if you're one of those, and what I just said about, being irresponsible, pisses you off by my words, remember, nothing I can say to you can piss you off, right? Life is a mirror, man. If anything I say frustrates you, there's probably some truth to that. And what I mean by that is, how do you know that? Right? Like you got to remember, like, we got to take our profession very seriously. We are out there helping people with the biggest financial decisions of their life. And I have no idea how severe this correction or crash or whatever we're experiencing is going to be. There's a lot of supporting data that show that this could be way worse than 2008. And there's also, I could argue certain points that might make it not near as severe, as that, but I don't know. So I can't go tell somebody that, oh, I know for certain that this isn't going to crash. And all of a sudden they make a decision based on, me saying something to them, then all of a sudden it falls off a cliff. Cause I can tell you guys this, I lived through, I've been in this since 2005. So I lived through 2008, 2009, 2010, and everybody said, nobody thought or expected or could have expected the market to get hit that hard. right? So that's not, I can't just go to people and say, oh, I'm sorry, I was wrong, I didn't realize. And then all of a sudden they've lost their house because of advice that I gave them. People are trusting us as a real estate professional. So be careful with your words because, we're professionals out there. So with that being said, I understand those concerns. And if somebody's not buying for a long-term purchase, if they're not going to plan on being in this house for, because in our market, 2008, when we got hit hard, I mean, it took almost 15 years for those prices to come back to, the mid 2006 peak prices. It took a long time to recover that back. So somebody's not buying for the long term. Hey, if you can't stay in this house for, 10, 15, 20 years, then that is, a risk that you could incur. So we've teamed up with Home Partners of America, right? Home Partners of America, nationwide, a company that's a rent to own company that will actually, our client will go get qualified for them. Home Partners of America will tell us, what they qualify for as far as a house purchase. We go out there, we let, the client that we're working with picks out the house. Home Partners of America will come and buy the house, pay cash for the house. So we get our co-broke right up front. Our clients move into that property. They have to rent it here in Phoenix for up to 90 days. Then anytime after that 90 days, they can purchase it, and they have the exclusive right to purchase it for the next 5 years at predetermined amounts, right? So this then gives them the option to buy at any time within the next 5 years, whenever, if they're comfortable in the next 5 years, if they decide, okay, I have enough supporting data that I don't believe the market's going to crash, or we get through this recession, or whatever we're going amongst right now, it probably won't last 5 years. It could, but maybe it doesn't. And they feel confident to buy. Okay, it's a hedge against their risk. They get to find the property that they want. They get to pick it out. They get to move in there. They got predetermined purchase price, but then also they reduce their risk, their exposure. What if the market crashes? They can just wipe their hands of it, move out, break the lease, or wait till the lease expires, and move out and not get burned by that. So it's a great hedge for that. Now, I'm not saying to go do Home Partners of America. I mean, it's a great program. We do a lot of business through them. It helps a lot of our clients out. I'm sharing these with you guys because I want to get your wheels turning. So I'm not promoting, like, I have no vested interest in Home Partners of America. I'm not an affiliate. I don't have any ownership there. We just do, about $30 million, $30 million a year in production with them through that one program. So, but I want to get these wheels turning for you. That's why I'm sharing these examples. Okay. The second thing, problem that our buyer clients are having right now is interest rates increasing, right? So, oh man, I wish I would have bought in January when interest rates were 3.5%. Now today they're 5.5%. Maybe they were able to buy a $500,000 house. Now today they can only buy a 4.25, house, and their payment's the same, but they don't want they want the $500,000 house, the payment differential. I think we're all experiencing a lot of that. Okay, well, we figured out a way to solve it. So we went out to, all the new builders in the area to see what kind of builders in our market now are starting to offer big incentives again. They're starting to offer bonuses, incentives, all of these things. Well, how can these incentives can be utilized, can be used, and so forth. A lot of our buyers back in January, sellers weren't paying closing costs. So our buyers were already prepared to pay their closing costs, right? Okay, well, now if we can get then the builder to either pay their closing costs, and then our buyer can utilize those funds they had set aside for the closing costs to now buy down that rate to those affordable payments again. Or in some, we've had certain cases with new builders now that the incentives have been so big, they paid our buyers closing costs plus bought down by 2 points, and so forth. Now we're also on resale seeing seller concessions again, and doing the same thing. So having a conversation with our clients' lenders and saying, okay, hey, what does it look like for us to buy down? I think today's rate's like 5.7, right? So, or 5.77, it fluctuates daily. So, okay, what does it take what would it take to buy this rate down back to that 3.5% interest rate? That they're first quoted, and that's in their payment comfort range. What would that take? Okay, well, let's get creative now and finding homes, maybe that have been sitting on the market a little bit longer, whatever, that these sellers are willing to pay these concessions. And we know that dollar amount, we're able to figure it out to get them back to that 3.5% interest rate. So then now, right, we're able to solve the increasing interest rates, for our buyers that want us to solve this problem for them. We're able to solve the risk and the concern of the market crash. Now we're able to go out there and market those, right? So we're able to put that in our marketing messaging, or, when we're doing open houses, having conversations with people about that of, hey, we're still getting we're able to go out there and successfully get our buyers that 3.5% interest rate. So when people are saying, I was really wanting to buy, but interest rates have gone up. I'm waiting for interest rates to go down. Well, what if I can get you 3.5% interest rate still then? Would you still want to buy? Well, hell yeah. Well, I'm just waiting for those to go down. Well, who knows if they're going to go down? Yeah, right. Like, I don't know if they're going to go down. The only reason they've slightly flattened out is because the Federal Reserve, even though they're in this tightening cycle, stepped back in and started buying mortgage-backed securities again. Wall Street is now set interest rates, if you will, on their bids at above 6%. So the only reason they're sub 6% right now is because the Federal Reserve has intervened again. The Federal Reserve can't intervene indefinitely. So, when people are like, oh, the interest rates are going to go back down, the only way they go back down is if the Federal Reserve jumps back in and starts quantitative easing again, which right now with CPI inflation continue and core inflation and wholesale inflation continuing to go up, I don't have confidence that the Fed can do that because it'd be contradictory and they'd be absolutely lying against everything they're saying right now, with number one priority being fighting inflation, because it's the opposite move of what they need to do, right? So we're able to go out there and solve those problems right now for them, have those conversations and convert a shit ton more of our clients. Okay, so number four. Step number 4 is watch for trends in your market. So before I talked about where the opportunities are at. So I'm always looking at where's the opportunity at right now? Who's buying, who's selling? Now I want to be watching for trends. So then I can do, what Wayne Gretzky, always said is, I skate to where the puck is going, right? Everybody else skates to where it is. I skate to where it's going. So I want to be able to anticipate where the market is going. And this is something that I've been doing throughout my whole entire career and allowed me to go out there and pivot very easily, from a market like we just got out of, seller's market, extreme seller's market. Then we, pivoted into, neutral buyer's market, and then the market fell off a cliff and went into short sales, REOs, and then transitioned out of that. And, it was a roller coaster ride, but I was able to anticipate it each time and prep for it and make that transition easily because I paid attention to market trends. So I know that anything at 3 months of inventory or less is going to be a seller's market, meaning this is supply and demand. So 3 months of inventory or 3 months of absorption rate in our markets, that's going to be that there are more buyers than there's inventory on the marketplace. And that's going to keep the real estate market strong and from a standpoint of valuations and drive prices up. Okay, once we get beyond 3 months, so 3.1 months, so in that 4 month range, so 3-4 months, beyond 4 months. So let's just call it 3.1 to 4.9 is going to be more of a neutral market, right? So that's going to be kind of equilibrium, equal amount of buyers, equal amount of sellers. That's the perfect world, 3 to 4% year-over-year appreciation, where it's just, real estate historically in a perfect world would appreciate about 1% above the inflation rate. And that would keep us there. Right. Then when we get beyond 4 months of inventory, so now we're moving at 5 months and beyond, that becomes a buyer's market, meaning that there are more listings than there are buyers available to buy those listings. So that's going to drive prices down, right? So it's just like you go to Target, if they have less, they have a limited amount of TVs and a lot of buyers wanting those TVs. There's a lot of demand now for them. It drives up prices and so forth. Right. Well, then they might have the perfect amount of TVs for the perfect amount of buyers, keeps it a neutral, market value, a neutral price. Well, then all of a sudden, if they way over TVs, and have 1,000 TVs, but only 300 people to buy those TVs, right, they're going to start slashing prices on those TVs. They become less value because there's an abundance of it. Simple supply and demand. You guys all get that, understand that, know that, right? So I'm looking at so I track this each and every single month. So I'm looking at this beginning this first 3 months of this year. Here in my market, we were around 0.79, fluctuate between 0.79 and 0.9 months of inventory. So still under a month. Now, between the last 3 months though, we've been trickling up. It's not a perfect average, but close to about half a month increase of inventory per month. So right now we're at like 1.8 months of inventory. So I'm watching that, right? So, okay, I can sit there and see if this continues. I want to see this, happen 3 or 4 months of continual trend growth. I'm tracking it each month. So then I can start to sit there and see based on the trend line of, okay, well, when will we be into out of a seller's market into a neutral market. If this continues, when will we be into a buyer's market? Then I know, okay, around 6 months of inventory, historically we start seeing short sales, and at least in my market, right? And then around 7 months, we start seeing more, some REOs pick up for closures, and so forth. So if my market is around, let's just say we're at 3 to 4 months of inventory, in that range, but we're still climbing by 0.5% a month. Well, at that point, that is the point where I'm going to start prospecting and marketing for short sales, right? Because that gives me, I know it's going to take 90 to 120 days for my short sale marketing to start kicking in. So I'm timing it. Not only am I looking at from the step before of where the opportunity currently is at, but I'm also able to then predict where we're going to be heading and when we're going to be there and put that in place. And this is how I was able to go out there and easily transition into short sales and REOs and build that up as traditional business decline. But then, I was able to go out there and build up my traditional geo farms and so forth, about a year before everybody else in my market, when we were still doing REO and still doing a lot of short sales and REO, because that was where the market was at right now. But I could see the trend lines and saw that, hey, we're less than a year away from this being over, like this game, like changing, where traditional buyers are going to come back. So and I knew, okay, to build up these geo farms, I built up a 50,000 home geo farm a market that were getting mailers from me on a monthly basis. And I knew it was going to take, in between 12 and 18 months to build up market share in that farm and really start to have that pay off. So it gave me that time. So by that time that market shifted, boom, I was in there. Right. So pay attention to your market trends. Go in and you got to know your market, know your numbers, know your market. Do your research. All right. Number 5, and this is a quick one. Work your freaking ass off. Right now is not a time to be focusing on balance. It is not a time to, have a pity party. Right now is a time, like, you got to shut your mind off about that kind of shit, and you just got to get to fucking work, man. Opportunities are going to be massive for those that are paying attention, those that are prepared, and those putting in the work. So work your damn ass off, work harder right now than you've ever worked in your life. And on top of that, restrict your spending. Make sure that you're making more than you are spending, and restrict your spending. I can tell you guys, now I don't know for certain, I don't have a crystal ball, but I spent a lot of time in research. I don't see any quick fixes or any, end in sight at this moment, for, let's just say food, like, let's just pick 2 things, food and energy. So energy costs are going to continue going up and up and up and up and up for a long time to come. Food costs are going to, we haven't even seen the beginning of food costs increases yet. We're still eating last year's crop. So these things are going to continue to go up. It's going to pinch consumers. So all of our cost of living is going to go up and up and up. Now there's going to be some crossflation, certain things, there's going to be this bullwhip effect that we're primed for, where like the Walmarts of the world have oversupplied in certain inventory because now demand destruction is happening. Where you're going to see, certain prices on certain things come down because they have to unload those. But for the necessities of life, prices are going to continue. Inflation is the best that we're probably going to see it for years and years to come. So this will help you get through all these times, working your ass off, stocking away that money. But then as these opportunities come available, because when this thing implodes, which it will at some point, and it's going to be, who knows how severe it's going to be, but it's going to implode. There's going to be massive opportunities, to be had. You want to be in a position to jump on those opportunities as well. All right. So I hope that these 5 steps have helped you. Keep crushing it, keep kicking ass. Appreciate you guys being here. And thank you again. Talk to you soon. Peace.